All right, good morning. It is Monday, October the 28th, 2024. We hope everyone had a nice weekend. Kroll family had a nice, relaxing weekend. The soccer team, the Rushing Otters, took it on the chin, 3-0, but beautiful weather nonetheless. Yeah, I think the girls had fun. So we hope you had a nice weekend as well. I've got a much needed haircut this afternoon, which I'm pretty excited for. Let's see. First thing on my list this morning, late last week, we mailed out the client appreciation games for early December. Okay, so Saturday the 7th and Sunday the 8th. A couple hockey games that we hope you and your families can attend. We've been doing these for a lot of years now, and it's always fun to kind of share the game of hockey, which, as you know, is near and dear to our office. So, only thing I would say on this, it does help with, particularly if there's a game that for scheduling reasons you want to attend, please RSVP as soon as you can. It's just that there's each night, the Coliseum only lets us have so many people in each of the suites, and so if you prefer one night or another, just RSVP as soon as you can, just so we can make sure we can fit you into said date. Methods of RSVP. It looks like Patrick created a new email address just for the purpose of tracking the RSVPs. So you can RSVP to hockey@oceansideadvisors.com, or just call the office and ask for Nick. So looking at markets last week, down a touch. Yields, interest rates have been stubbornly kind of creeping higher. We've had a couple clients come in and ask, just with the Fed cut rates, right, by 50 basis points, just whatever, a month or so ago. Why are mortgage rates moving higher, right? And just an important thing to understand is the Fed controls the very short end of the yield curve. Okay, so like overnight lending rates, basically, which is going to heavily dictate like HELOC rates and interest rates you receive in savings or money market, things like that. Whereas mortgages, that they were largely based roughly like what the 10-year treasury is doing. Okay, so kind of like more like an intermediate to longer term duration. And so that's the part of the yield curve that's kind of been drifting higher. A couple thoughts on that. I've got three written down here, why interest rates might be ticking a little bit higher since the Fed rate cut. First one is, economic data has largely been a little bit better than expected over the last month or so, right? So that would be a good reason for rates moving higher, as the probability of recession, maybe is going down some. Inflation data has been roughly in line, but we a couple of the data points came in a little bit higher than expected. Okay, so higher than expected inflation would also warrant higher interest rates. The third point on higher yields that I thought was interesting. I read an article over the weekend, and so the election is, 8 days away, right? So. But the article pointed out, like, both presidential candidates are obviously proposing a lot of things and kind of in their agendas. And if you look at it just very objectively, right, both policies that are being proposed are largely inflationary. Okay, so the article just brought up, hey, like, one reason we might be seeing rates go up is inflation seems to be in check right now, but kind of what we're hearing from both presidential candidates, like what they're proposing is could potentially be inflationary and maybe put more of that inflationary pressure back into the markets down the road, which is that could easily be a reason why you're seeing bond traders potentially sell off some bonds, which would increase interest rates. So I don't know. We'll see. We get some jobs data later this week, which is always interesting. That comes Friday. We also get third quarter GDP, gross domestic product. So questions, comments, concerns, please don't hesitate to reach out to our team. And we hope everyone has a great week. Thanks.